OG John AG here. While most people are still arguing about whether silver's short-term bottom is in or not, a completely different bomb just went off quietly in the background. Peru has stepped forward and said, "We now control 22% of the world's silver reserves, about 140,000 metric tons in the ground." Translate that. Roughly 4.5 billion ounces of silver sitting under the soil of one country, not spread across 50 nations, not in some abstract model, locked inside the borders of Peru. That's not a clickbait number. That's based on official geological surveys, reserve reporting at the national level, and the same Peru that's already a top 3 silver producer globally. Tonight, we're going to break down what this 140,000 ton number actually means, why reserves on paper are very different from metal you can actually buy, how this shifts the balance in the US, China, Latin America resource tug of war, and what this tells you about silver's long-term risk, reward, and who really controls the game. I don't sell courses. I don't sell trading signals. I don't run a VIP group, and I will never DM you asking for money. I'm only on YouTube, this channel, John AG here, and the name is OG John AG. If it's not here, it's not me. Let's zoom in on how Peru quietly became silver's hidden king. Segment 1, 140,000 metric tons, putting the number in human terms. The headline is 140,000 metric tons of silver reserves inside Peru. If you're not used to thinking in tons, it just sounds big. So let's put it into something you can feel. 1 metric ton is about 32,150.7 troy ounces. Multiply that out, 140,000 x 32,150.7, 45015, 98,000 ounces, around 4.5 billion ounces of silver. Now imagine 4.5 billion 1-ounce coins, edge to edge, stacked in tubes, boxes, pallets. If you dropped 1 ounce on your foot, it wouldn't change your life. If you dropped 4.5 billion ounces on the global market, it would. On a global reserves map, this number equates to roughly 22% of all known silver reserves on Earth. So 1/5 of tomorrow's silver, in theory, is tied to decisions made in Lima regional capitals and the mining belts of the Andes. That's the level of concentration we're dealing with. Segment 2, where is this silver actually sitting? The article makes it clear this isn't one mega mine that just got discovered. Peru's 140,000 ton reserve figure is an aggregate across multiple regions and deposit types, including historic districts like Cerro de Pasco, with a long history of polymetallic mining high-grade silver operations such as Uchucchacua and similar underground systems. Large polymetallic deposits where silver is produced as a byproduct along with zinc, lead, and other metals. So what does that tell you? The silver isn't sitting in one giant, easy open pit. It's distributed across mature districts, high-grade veins, deep underground mines, and multi-metal deposits where silver economics depend on other metals too. The complexity matters. Different deposits have different costs, risks, and timelines. Some are ready to expand production quickly at higher prices. Others need billions in capex, new infrastructure, and years of development work. But taken together, they form a national endowment that's massive in scale. Peru is basically saying to the world, if you want a future in silver, you're going to be dealing with us for a long time. Segment 3, reserves versus production, today's flow versus tomorrow's power. A lot of people confuse production with reserves. Production is what comes out of the ground this year. Reserves are what's identified and economically extractable over many years at current or expected prices. Peru already ranks as one of the top silver producers annually, competing with Mexico, China, and others. But by emphasizing reserves, Peru is shifting the conversation from "we sell a lot now" to "we will matter even more later" reserves. Shakhters, optionality, and power. If prices are low, you slow development, keep metal in the ground. If prices rise or supply elsewhere gets tight, you ramp up, attract capital, and bring more projects online. All of that changes the supply curve for the entire world. In a market where the Silver Institute is already talking about multiple consecutive deficit years, meaning demand supply, and investment demand is expected to keep overall demand elevated in 2026 and beyond. A country that controls over 1/5 of future reserves is not just another line on the chart, it's a potential governor on the entire market's future supply. Segment 4, the OPEC of silver analogy and its limits. A lot of people see 22% of reserves and immediately jump to Peru is the new OPEC of silver. The article doesn't use that exact phrase, but it strongly hints at this kind of influence. Let's break the analogy. OPEC doesn't own all the oil, but by coordinating a big chunk of supply, it can tighten or loosen flows, influence prices, shift bargaining power in global negotiations. Peru alone isn't OPEC. But Peru inside Latin America, a region already responsible for a huge portion of global silver mine supply, becomes a central node. Imagine two paths. Coordinated path Peru aligns more tightly with other silver-heavy countries in policy, rhetoric, and trade. It leverages its reserve dominance to negotiate better terms with smelters, refiners, and buyer nations. Competitive path. Each country acts independently, but markets still price in the fact that Peru's decisions on taxes permits environmental rules. Can move the needle on global supply expectations. Either way, the result is similar. When one country's policies can affect 22% of future potential reserves, the silver market has to pay attention to that country. The limit of the analogy is this. OPEC is a formal group with explicit production quotas. Peru is a sovereign state, part of broader regional dynamics, not a cartel on its own. But from a macro investor's perspective, the takeaway is supply power is centralized more than most people think. Peru is now one of the key levers on that power. Segment 5. The hard part. Turning reserves into metal. Now we get to the painful truth the article highlights. Just because reserves exist on paper doesn't mean they are easy to mine or guaranteed to reach market. Peru faces several real-world constraints: political risk, changing governments, shifting tax and royalty frameworks, debates over resource nationalism versus foreign investment, social and community conflict, local communities demanding more benefits or environmental protections, protests and blockades that can halt operations or delay projects, environmental and regulatory hurdles, stricter standards on water use, tailings and emissions, longer permitting timelines, infrastructure gaps, remote high-altitude regions needing roads, power lines, and processing facilities, high logistics costs if those are not in place. All of this means the 140,000-ton reserve figure is a ceiling, not a baseline. The real question is, how much of that can be mined profitably? How fast? Under what political and social conditions? From a market perspective, this is exactly why you can have huge reserves on paper and persistent deficits and tightness in actual supply for years. Silver can be both. Abundant underground, scarce above ground, and that's a recipe for violent price moves when demand spikes. Segment 6. Peru in the US, China, Latin America resource triangle. Zoom out to geopolitics. We've already talked about China spending years locking up offtake deals in Latin America, the US waking up and trying to pull more metal into its own refining and strategic systems. Now add this Peru reserves story to the mix. Peru's 22% share of global silver reserves means any long-term US strategy for secure silver supply must consider Peru. Any Chinese plan to maintain access to silver also must consider Peru. The article frames it as Peru's reserves becoming a strategic lever in global negotiations about energy transition, industrial supply chains, monetary hedges tied to precious metals. In practical terms, you might see more US and Chinese investment in Peruvian mining projects. Competing infrastructure offers trade agreements that explicitly or implicitly prioritize access to Peruvian metals. Each one of those moves tightens or loosens the flow of metal, alters expectations for supply, and ultimately ripples into silver's price and volatility. Peru is not just a producer now, it's a battleground. Segment 7. What this signals for silver's future path. So what does this all signal for silver over the next decade? Combine Peru's 22% share of reserves, projected ongoing deficits in silver if investment and solar EV demand stay strong, the time lag and complexity required to bring new Peruvian projects online, and the geopolitical tug of war over Latin American resources. You get a few clear implications. 1. Volatility is here to stay with supply concentrated and politically exposed. Small shocks can cause big moves. Elections, protests, or policy shifts in Peru can become global price events. 2. Peak silver narratives are too simplistic. Geologically, there is a massive endowment. The issue is cost timing politics. Social license, not physical absence of metal. 3. Long-term upside case remains credible. Markets have to price the risk that not enough of Peru's reserves will come online fast enough, while demand for industrial and investment silver remains strong. That is exactly the kind of backdrop where multi-year bull markets punctuated by brutal corrections are more likely than simple straight lines. Segment 8. How a serious investor should use this information. If you're serious about silver, whether through physical ETFs or miners, here's how I'd use this Peru story. Step 1. Update your mental map. Don't think of silver as random global metal. Think Latin America heavy, Peru and Mexico central, US and China both hungry. Step 2. Respect country risk. If your mining exposure includes Peru, read about local politics, track regulatory news, watch community relations closely. If your exposure doesn't include Peru, remember that global price still depends on what happens there, even if your stock is elsewhere. Step 3, expect gaps between headline reserves and real supply. When you hear 140,000 tons, don't assume, oh, supply is solved, prices must fall. Instead, ask, how fast can that actually hit the market? Who will finance it? What happens if social or political risks slow it down? Your edge as an individual investor is not speed. It's the ability to think on a 3 to 10 year horizon while everybody else reacts to this week. Segment 9, call to action for your viewers. You're watching John Agee here, and I'm OG John Agee. If this breakdown helped you see why Peru now controls 22% of the world's silver reserves is a strategic shift, not just a trivia fact, how 140,000 metric tons can be both a blessing and a bottleneck, and why one country's geology just got upgraded to a global silver lever, then hit subscribe right now so you don't miss the next deep dive into silver, gold, and the politics behind the numbers. Smash like so YouTube understands you want real analysis, not just noise. Drop a comment with Peru King if you now see Peru as a core part of the silver story, and tell me whether you think this concentration makes silver safer long-term because the resource is there, or more explosive because access to that resource is fragile. We'll keep tracking. New data out of Peru on reserves and production, Silver Institute research on global deficits and demand, and the moves the US and China make in Latin America as this resource map gets redrawn. If you want to understand where silver is going, don't just stare at the price. Watch who controls the ground it comes from.